Going. Kelly, I've made you admin if you can just let people in, please.
Thank you. I saw.
Okay, right. What are we talking about today? So, welcome everyone. As always, I'm not giving you financial advice, but we are going to be dealing with a hot potato today, which is the future of the US dollar. So, what is interesting is that the second white paper that we did was on the Okay, I've just muted everyone, and then if you want to chat, just unmute yourself, please. Okay, so on day two, we had a panel on the future of the US dollar. So George Gammon was on the panel, Mike Maloney, Biren Lundin, Brent Johnson, Peter Schiff, and Robert Helms was the moderator. In the US dollar, is the US dollar strong or weak? And what does that really mean? For over 100 years, the dollar has trended in the same direction. How long can that continue? What about its role as the reserve currency? In an increasingly globalized economy, many things are changing before our eyes. This morning, we'll ask some of the smartest people we know to weigh in. So that is and was the panel. And what was interesting is that before I go any further, let's get a little bit of crowd participation here. Let's do a bet, a spread bet. So the question is, firstly, do you think that the dollar will remain the reserve currency? Yes or no? And if it's yes forever, then just you can put it. But if it's no, then I'd like you to put in the time frame that you think it'll change. So, like as an example, let's say you think the Chinese yuan will take over in the next 10 years. Then the answer to the question is no, 15 years. So I'm just interested on people's opinions. Like, what do you think? Do you think the US dollar will remain the reserve currency of the world? Or do you not think it will remain the reserve currency of the world? And if you don't think it will remain the reserve currency of the world, how long will it take something to replace it? So Jane, as an example, said no, crypto will take it over in 10 years. Camille said no within the next year. Wow, fascinating. Yes, dollar will remain. I think no, because 100-year rule. I think gold in 15 years. Kai says 20 years. I say no, 10 years. No, 25 years. No, 10 years. No, 15 years. Yes, dollar will remain. Interesting. None of us know, by the way. It's a crystal ball. So we're all looking into the same crystal ball. And but I did enjoy this panel a lot because you had some of the smartest minds in the world debating this. And the one thing that was really interesting was they were clearly told that there's no problem if they disagree with each other to have a proper bloody fight is the best way to describe it, because it was just short of a fisticuff in terms of like people's opinion. Like they had no problem having very strong arguments with each other, which was entertaining, but also interesting to see how strongly people viewed what they were thought. So my suggestion is we've got everyone's kind of views on it. Let me go through what we did. So just actually, funny enough, in this white paper, I realized I made a mistake because it says here in this powerful investor summit session, macroeconomist George Gammon, which is wrong because I've already told you it was it was a panel and there were about where's it gone now? 1, 2, 3, 4, 5. 1, 2, 3. Yeah, there were 5 people that were on the panel. So it wasn't just one person. So what they did basically was they looked at the historical role of the dollar as the world's reserve currency, the political and monetary contradictions shaping today's monetary system, and how shifting global power dynamics, especially between the US and the BRICS nations, may alter dollar dominance. Gammon offers a compelling synthesis of real-world data, political insight, and financial strategy to help investors navigate a world where the dollar may remain dominant or rapidly decline. For anyone seeking to protect and grow wealth in a volatile macro environment, this talk delivers both clarity and actionable strategies. So I need to just fix this this summary because it wasn't just him on his own, it was a panel. Okay, let's look at the key takeaways. The US dollar is both strong and vulnerable. In the short term, the US dollar remains dominant due to global debt and demand. In the long term, geopolitical shifts and weaponization of the dollar threaten its stability. So what does that mean? Basically, the majority of global debt and how like pretty much everything's paid for. I know that some of the BRICS nations are trying to trade in oil now outside of the dollar. But I know that Anthony's shared some stats with us before, and it's something like still like over 60% of the global trade is done in US dollars, 60 or 70%. It was a significantly high number compared to the yuan, which was like 2%. So that's what it's talking in the short term. And then in the long term, the geopolitical shift. So this is that whole shift towards China and the East, and specifically what Trump has done with regard, and well, actually not even just Trump, because it was Biden as well, with regards to the, basically seizing all the assets of the Russians, etc. That's what they keep talking about with this weaponization of the dollar. I hadn't heard that before I went on this trip, but weaponization is where they basically seized assets. But no one now trusts whether their money will be held, because you might have money in American banks and the American government decides they don't like you and they just switch you off. And so obviously, people don't necessarily trust it as much as they used to. The one thing that's interesting here, which I don't know if it comes up later, so we'll come back to it, but I did talk about it, and it was probably my biggest takeaway, was what's called network effects. So with a cell phone, and I've explained this before, but I'm just going to explain it again. Hang on 2 seconds. I don't need my cell phone. So if you take a cell phone, if I've got a cell phone, but no one else has a cell phone, then a cell phone is useless. But if everyone has cell phones, then my cell phone is very valuable because I can contact anyone else. That's what's called a network effect. Facebook was useless when it only had one person on it, but when you got all, everyone, then it's valuable. A fax machine. When a fax machine came out, it was useless until everyone had a fax machine. And now that no one has a fax machine is useless. And the point being is that it's all called network effects. Now, I don't have ever thought of it based on technology. And they always say in technology, to replace a technology, you've got to be 10 times better than the previous technology. And what specifically George Gammon was talking about here was that the US dollar is the biggest and best network effect the world has ever seen. And he went on, and I think I've told you the story, but he went on to tell us how he went through Argentina, and he had crypto, he had Bitcoin, he had gold, and he had a US dollar. And literally 99% of people, all they were interested in was the US dollar. If you've ever traveled through Africa, you would attest to the exact same thing. If you ever traveled through Southeast Asia, you would attest to exactly the same thing. In fact, I've never been anywhere in the world that didn't want a US dollar. And so that's the idea of the network effect. So the question always comes in, and what he basically said is he doesn't disagree that something will replace the US dollar in time, but it's going to have to be something that is 10 times better than the network effect of the US dollar. And there's nothing on the horizon. Bitcoin is nowhere near close to that. There's nothing on the horizon at the moment that looks like it's going to replace it with a 10 times better return. So that was probably my biggest takeaway from the entire panel. Then if you look at BRICS and the de-dollarization, China, Russia, and other nations are actively building alternatives to the dollar-based system. While full replacement is unlikely soon, the trend erodes the US dollar's structural advantage. Domestic US policy is contradiction. So simultaneous attempts at economic growth and monetary tightening creates a systematic tension. Inflation remains a looming risk, especially if fiscal dominance continues. Digital currencies will play a role. So the rise of CBDCs, so central bank digital currencies, may accelerate money transitions. And specifically, this is where they were talking about the digital yuan. And it was interesting here because the whole thesis for a digital currency is supposed to be decentralization. When you've got a digital yuan run by the Chinese government, then it's all about control. And so there's this whole battleground based on who's going to win this in terms of trust. Because I don't know if you've heard it before. I love the saying, the currency of the 21st century is trust. Investors must think globally. exposure solely to dollar-denominated assets increases risk. Global diversification is now essential, not optional. You might notice when I told you the overall theme was diversification, you can see it coming through over and over again in every panel. Okay, the action points for investors: diversify currency exposure, hold assets in non-USD currency, so the Swiss franc, the Singapore dollar, gold, and crypto-backed options. Add inflation hedges, so consider commodities, real estate, and other hard assets that maintain value in inflationary environments. Watch global trade settlements, so track movements like oil trades in yuan, BRICS currency announcements, and SWIFT alternatives. So again, I don't know if you know this. I don't know how much I'm telling you that you know or don't know. But SWIFT is a system where all the banks across the world, it's how they all send money. And it's owned by America, and it was invented by America. And so when America decided that they didn't like Russia, they just switched off all access to Russian banks with SWIFT. So again, everyone sits around the world going, well, hang on, we don't like the fact that America can just bully us. So SWIFT used to be the global how banks spoke to each other. But now, everyone's sort of going, well, hang on, but can we trust whether we can actually use that? So there's already alternatives coming out to SWIFT. Prepare for volatility, reduce leverage, strengthen liquidity, and build a plan B. Can you all hear me still? Sorry, my brother's trying to call me. Can you still hear me?
Yes, we can still hear you.
Okay. And then stay educated. Follow macro analysis, Gammon, Dalio, Ricketts, and develop a framework for geopolitical risk assessment. So I think this is one of those things that for you and me as just normal people, as normal investors, like I don't think we need to lie awake at night worrying about this stuff. I really don't. But it is really interesting just to understand some of the geopolitical and macro things that are happening and what impact that will have with regards to investing in terms of that process. So if we go into a little bit more detail, the historical context and the power of the dollar. So post-World War II, Bretton Woods Agreement came into account. So 1945, basically America won the war. I know the Brits don't like me saying that, but that's what happened. And because they had all the money, they literally basically said, right, this is the way the world will work. And it was an agreement that sounds like people sat around a table and had an agreement and were all playing fair. I think it was much more one-sided. We have the money and this is how it will work. It was pretty much, I think, how it happened in 1945. Even after the gold standard eroded in 1971, demand for the US dollar remained due to trade and debt. So it was interesting. They had a whole debate in this panel. And they said, if people were going to be upset with the US dollar, specifically when it was not backed by gold, when Nixon took it off the gold standard in 1971, that was the time right there and then to go, we don't trust the dollar, we're walking away. Like the rest of the world should have done it right there and then, but they didn't. And now they're like even more hooked into the system than they were back in 1971. Global markets, especially commodities like oil, are still priced in USD, preserving its strength. Now, I know that BRICS is trying to move away from that. The dollar is still king, but that throne is increasingly under siege. Okay, so that was the one thing. Then the weaponization of the dollar and trust breakdown. The freezing of Russian assets post-Ukraine invasion sent a chilling message. The US can cancel your reserves. Countries like China and Saudi Arabia are now questioning whether their US Treasury holdings are truly safe. Trust, not just economic metrics, determines a reserve currency's life. So again, like the only reason the US dollar is valuable is that everyone around the world trusts that if they have a dollar, someone will want that dollar. But if someone suddenly has a Zimbabwe dollar and no one wants the Zimbabwe dollar, then it's worthless. De-dollarization in motion. BRICS countries are launching efforts to bypass the dollar in trade settlements. More countries are holding gold, yuan, and other currencies as reserve. Gammon urges that this is a trend, not a one-time event, much like a slow leak, not a burst pipe. So, if you think of a slow leak on a wheel, his philosophy is it's happening whether you like it or not. It's just how long is it going to last in terms of that process. But again, he was the one that specifically brought up the network effects. And what he was trying to say is that people think it's going to be like an overnight change. And the chances are it's not going to be an overnight change until some technology or some network effect comes out that is literally 10 times better. Okay, monetary tightrope and US domestic risk. The Fed is raising rates to fight inflation, but the US debt levels are soaring. So what this means is that what the US is trying to do is that what Trump is trying to do is devalue the dollar so that he can make things more affordable so that effectively Americans can export. But by the same token, the Fed is worried about inflation, and so they're raising interest rates. But the problem is they've got so much debt that when the Fed raises interest rates, the Americans have to pay more money in debt. And they're in this trap because the higher interest rates mean higher debt servicing costs, leading to more money. And the result is policy contradiction, printing money to pay interest on previously printed money. I always say it's like a credit card. Like, I don't know, for those of you who don't know this, but in England in the 2000s, you could get credit cards. It was so easy to get credit cards. It was ridiculous. So you could get a credit card to pay off another credit card, and then you could get a credit card to pay off that credit card. And it was like you just got into this big credit card bloody spiral. That's how the American system feels right now. And the biggest thing that I found really interesting, which I understood, is that they got to the point where their interest is higher than their total income. And so they're now borrowing money just to pay the interest, but they're not even like they're basically in a death spiral when it comes to the trap. Just type in the chat box if you understand what I just said there. So let's say, for example, your income is $10 and your interest is $11. So you literally have no money to pay for anything else. So you have to borrow more money just to pay off the interest. And then you have to borrow more money to pay off the actual costs you had. But the more money you borrow, the higher your interest rate go, which means you have to borrow more money. And it's basically a downward debt spiral. CBDCs and the digital future dollar. The US and other countries are exploring central bank digital currencies. These may increase efficiency, but reduce privacy and enhance state control. The one thing that entire panel agreed on, and there's probably a reason we were in neutral waters. By the way, it's quite interesting. Some of these panels are done on purpose in neutral waters so that the people could express their opinions without any retribution. And the one thing they all agreed on was there's far too much government intervention. And the best thing that could ever happen for America is that, the government gets out of business. And the bottom line is the government is dramatically reduced. They did say that what Trump is trying to do is more of a political statement, and actually, I forget the name of it, Doge. What he's trying to do with Doge, it makes zero meaningful impact at all in terms of the process. CBDCs could be used to enforce monetary policy, negative interest rates, expiry dates for money, etc. What they basically said, it's not just about technology, it's about who controls the money and how. And then practical frameworks for investors. Investors should understand both short-term dollar strength due to global debt and long-term vulnerabilities, geopolitical shifts, inflation, de-dollarization. Diversification across countries, geographies, and asset classes is not a hedge, it's survival. The next decade will be defined by a tug-of-war between legacy systems, US dollar and Western finance, and emerging alternatives, BRICS, crypto, and CBDCs. It said here, don't bet on the collapse. Don't bet on forever. Prepare for transition. The dollar isn't dying overnight, but it's not invincible either. Building an intelligent, globally diversified portfolio is the best protection against the uncertainty in the next monetary era. Okay, so what I now want to do is I want to share with you my notes, my actual notes. You can see my handwritten notes. Good stuff. It worked. Okay. So let's go through. I've got lots and lots of notes. Is it easier if I do it that way around? Not really. Okay. Okay, so what I want to do here, I'm just going to sit down so I can read my thing properly, yeah? Was the part that didn't come up in that PDF, and it's why I wanted to go to my notes, was this is what I really enjoyed with Mike Maloney. So he studied the history of money. So he's the guy that's gold and silver. And he took us right back to where money actually started. And he spoke about beads, cowrie shells, etc. Now, I don't know how many of you know this. I didn't know this, but I thought it was pretty cool. Do you know that jewelry was the first wallet? So think about it in the old days. You lived in a hut and you had your wealth. Your wealth was your gold, okay? But if you leave the hut, someone can go in your hut and steal your gold. So why did jewelry exist? It wasn't to make women look pretty or to make men look pretty. It was because you were your own wallet. You literally carried your wealth on you. Very interesting, huh? And then obviously that then became a thing of like, oh, that person's got wealth, etc. And and the women were looking for a man who could provide. When he studied money, he went to 7 national money museums, and he was looking at every single thing that had been tried to be used for money. And all of them had failed. And every single society around the world had settled for gold and silver. China was the first to use paper. And every single time any economy anywhere in the world has gone to paper, every single time in history, across the last 2,500 years, it's gone to zero. What he said at the moment is the current system is immoral. The government and what they're doing is based on fraud, theft, and enslavement. And they basically make you borrow and then pay off the debt in terms of it. He said gold is the only honest money, and it's a 3-way trade where no one is getting screwed. So there's 3 parties in the transaction, the buyer, the seller, and the middleman, and everyone is benefiting through the process. But the problem with gold is it's heavy, and so the opportunity is a cryptocurrency backed by gold, so digitize it. But that's never going to happen because the government will hate it because it'll constrain their spending. So there was a lot of conspiracy theory here. Just by the way, if anyone's got any comments or questions, just type them in the chat box. I'm very happy to engage. I'm just trying to give you as much feedback as I can from this panel. But yeah, in simple terms, there was a lot of conspiracy theory and the fact that the government will never give up control. Then George Gammon spoke about the fiat system, and he said it's the only system which can expand with productivity and can devalue. So the logic was it can grow and it can come down, but it's all based on productivity. Just by the way, this word here, productivity, is exactly what Ray Dalio talks about in his long-term trends. He said everything is based on productivity. So economy is either producing or it is not. And it's either a net producer like America was in 1980 or it's not. America now is the world's biggest consumer. And the logic is if you take a long-term graph, you're either producing long-term and you're going to win, or you're consuming long-term and you're going to die. Mike Maloney then went on again to talk about the theft. He feels very strongly about this, the way the government is looking at it. Peter Schiff said that we're in a gigantic bubble. And the problem is the interference of the government and all of this M2 money supply and the bailouts of QE, Q1, 2, and 3. And he went on, remember we spoke about this last Friday, the banks are insatiably greedy, and no matter what standard we're on, they're going to keep doing what they do. So what he basically said is whether we're on the gold standard, the Bitcoin standard, the oil standard, the US dollar reserve bank standard, whatever standard we're on, the banks are insatiably greedy, and whatever they do, they're going to find loopholes and they're going to take risks at other people's expense. Biren Lundin said that there won't be a gold standard. So by the way, this is the guy that literally runs the gold, like whatever. So, I mean, he's like the biggest, they call him a bug. He's the biggest gold bug, like almost out there. But he said there won't be a gold standard because the government won't ever give up their power. Because if there's a gold standard, they don't have the ability to print money because they are held to account. What did they say here? Have gold and silver legal tender Oh, so if you had gold and silver as legal tender, it would take away capital gains tax because gold is the only asset that has gone up since 1971. Apparently, and obviously someone would need to verify this, but apparently, according to the panel, if you look at all asset classes, real estate, oil, the stock market, anything, nothing has actually gone up if you take it in terms of gold price. And the only asset that has gone up since the early 1970s is gold itself. Gold is the only thing that's gone up in the last 25 years. That was according to Peter Schiff. Brent Johnson spoke about loaning money to create money. So that's that whole banking system thing that we spoke about. France, so he went back to why Nixon took America off the gold standard. And basically, because America, the US dollar used to be backed by gold, and France stopped trusting America. So it said, right, well, I want my gold back. And then Britain and Germany basically said they want their gold back. And so Nixon came out in 1971 and said, well, the dollar's no longer linked to the gold standard. And what he basically went on to say is that America defaulted. Like it defaulted on its liabilities. Like it owed gold and it said, nope, I'm not paying you gold. And there was a big markdown of the US dollars in the 1970s. And basically, this is why I already told you this. The world should have walked away in the 1970s. But what they did very cleverly and quite quickly in the 70s is they got Saudis to agree to price their oil in dollars. And ever since then, the dollar, held its status as the reserve currency because oil, which everyone needs, was now priced in US dollars. And you wonder why there's so many very wealthy people in Saudi Arabia. I'm sure you can join those dots. Then the question is where to from here? Well, the world walks away from the US dollar. America loses its privilege, and the consumers in America collapse. So what it meant by its privilege is America can keep printing its way out of problems because it's the reserve currency. But the moment it loses that privilege, then it can't print it, and the consumer in America will collapse. The likelihood of the US dollar not being the reserve currency, well, the trend is going in that direction. And he showed us a bunch of graphs, and he said the trend is going in favor of gold. When will these lines cross? So basically, in simple terms, if I just show you with my hands, there's a graph going down that way, and there's a graph going up this way. And the trend analysis was they're going to intersect because basically the reserve currency of the US dollar is coming down, and the increasing demand for gold is going up, and they're going to intersect. And the question was when. And what they said here, when the lines will cross, not too soon. They're kicking the can down the road. So this is what Peter Schiff said. I haven't heard this before, and I know it's common, but I don't know if anyone else has heard it. So Peter Schiff said when it comes to the American economy, with the debt, they keep kicking the can down the road. But in his opinion, they're one kick away from collapse, which I thought was quite funny. As in, that saying, you kick the can down the road. Peter Schiff said he thinks it's going to happen in the Trump era. And then again, this conversation, which was that America's in better shape than China, because America's got a $3 trillion deficit, but China has a lot more debt. And then they went on to debate what is a reserve currency and what are people using in the real world. And they went on to say, like, really a reserve currency comes down to business and people and what do they want. And they're all using dollars. And I've already explained this, but this is where George Gammon was talking about the dollar as the global power in a network, which is the massive amount of utility. It's the biggest network in the history of the world until we have one, which is 10 times better utility. And then they spoke about the decentralized crypto. And Brent said that this is a really long shot. So he didn't see crypto going that way. Crypto's done nothing to reinforce the dollar. Stable coins backed by the US dollar. So what he basically was trying to say is that crypto's done nothing to jeopardize the dollar, and that the most common coins are stable coins, which are backed by the US dollar, which actually just reinforces the reserve status of the US dollar. Then Biren Lundin spoke about the Bitcoin principle. And he basically said, like in the beginning, the Bitcoin was really good. It was all about decentralization and whatever. But nowadays, it's just a get-rich-quick scheme. And it basically, the whole idea is to get others to buy for your own good. And it's pretty obvious. So pretty much that whole bubble bust thing. But what one of them pointed out was we're at a cruise now with 130 people. The gold conference this year had 1,000 people, and the Bitcoin conference had 35,000 people. So what they were just saying is like, where's the sort of the hype at the moment? Mike Maloney said that in the beginning, Bitcoin was a distributed ledger, which was brilliant. But the fact that it takes 7 seconds, but now that Wall Street have come in, they've got very deep pockets and they're gunslingers. And if you're the man in the street like you and me, we're going to lose against Wall Street. So he said in the beginning it was excellent, but now you're basically competing with Wall Street. The best digital currency is backed by gold. And he says you should have basically tokenized gold. And he said, what they all said is just get the government out of the system of money. A free market will decide, but that is never going to happen. And then what did they say here? Big topic, big brains, stimulate thought. Mission, raise a bunch of questions. Oh, so this was the moderator was saying this. So there was this fierce debate. And by the way, I have them all recorded if someone wanted to listen to the recording. But what they were saying at the end here was that it created, there was quite a lot of, I wouldn't say animosity, but certainly fierce debate. And then what he said at the end here is that the whole idea behind the panel was to open up questions to debate and discuss in terms of that whole process. So anyway, I hope that helps and hopefully gives you a little bit more context to the white paper in terms of my notes. So let me stop sharing now. And what I'll do is let me look. I can see there's some things in the chat room there. And then what we're going to do is we're going to break into a breakout room so that we can have a conversation around this because it's not only me. So Camille said, Scott, do you think the fact that paper money devalues, it continually pushes people to become more efficient, innovative, and productive? Devil's advocate here, but it could also be a good thing, maybe survival of the fittest through the agency of currency. Hence making financial education and knowledge of assets and liabilities and debt even more important. Yeah, I think if I understand you correctly, I agree with you, but that comes back to productivity. And one of them said that, I think it was George Gammon in my notes here. And he said that the thing with the fiat currency is it's the only system that's been in the world so far. Where was it here? I read it to you, but I can't remember where it is. Anyway, they basically said, George Gammon said the fiat system is the only system which can expand with productivity, which is what you're talking about, Camille, but equally can devalue based on a lack of productivity. But what they said, and specifically Mike Maloney said this, is that if you go back 2,500 years and you look at every single economy that has gone to paper, including China being the very first one, every single time governments have printed too much money based on greed, and eventually it's collapsed. Hendrik Verwoerd was assassinated when he refused to take the rand off the gold standard, apparently by the American government. Okay, we'll add to the conspiracy theory. I'm not on a boat, by the way. I'm not sure if we're allowed to have this conversation, but anyway. Would you mind clarifying what tokenized gold is? Yeah. So in simple terms, think of Bitcoin. So Bitcoin is a cryptocurrency, but it's not actually backed by anything. I don't care. You can talk to any crypto person in the world. I always say, if you went to an event and I put you on stage and I put a gun to your head and I said, right, explain what a Bitcoin is and where the value of Bitcoin is. And if you don't get it right, if the crowd doesn't understand you, I'm going to shoot you. There's not a single person on the planet that would take up that offer because there is no value. It's based on sentiment, which, by the way, is not too dissimilar to the US dollar because there's no value behind the US dollar either. It's also based on sentiment. The difference with if you tokenize something which is called a security, so I don't know how much detail you want to go into here, but you get two types of coins. You get a utility coin, which is where you use it, and you get a security coin, which is where it's backed by a security. So a security is like a house. This property here is a security. It's a real world asset. Gold is a security. It's a real world asset. So what they're basically saying, if they say tokenized backed by gold, it's saying having a cryptocurrency that's backed by gold. So imagine that someone goes out and they buy a whole lot of gold and they stick it in a vault. And then they say, right, we're going to have a coin or a token. It's the same thing. Coin and token are the same thing. And we're going to, let's just say we got 100 ounces of gold. So, and we're going to have 100 tokens just to keep it simple. So one token is equal to 1 ounce of gold. And the point is the gold has to stay in that vault because it's backed by gold. And so the token which is a digital currency, can easily be bought and sold, but it's still backed by that 1 ounce of gold. So the theory is you're using the best of blockchain and technology, but you're still tying it to real world assets versus just sentiment. Does that make sense? So yeah, like Reg is saying, stablecoin like Tether or USDC, they're exactly the same. So those two, like USDC, it's basically a stable coin because it's backed by the US dollar. But that's what I said earlier. The theory and the debate at the table was that cryptocurrency has actually enhanced the US dollar as the reserve currency, not detracted from it, because the majority of stable coins are backed by the US dollar. Camille, you got your hand up. Do you want to talk?
Yeah, I'm allowed to, Scott.
Yeah, go wild, dude. As long as you
cool.
Of another assassination attempt.
No, sorry, I didn't realize you're not in a safe space.
I literally don't give a shit. You must see these Americans. They wouldn't start a WhatsApp group in case they got sued. I'm not joking. I literally was like,
my word,
it'll be so awesome to talk to all these 130 people. Why don't we just put up a QR code with WhatsApp? And they're like, no, we don't know what our legal consequences are. Literally, I'm not joking.
Yeah, quite a litigious country that. Scott, a quick one. I was enjoying what you were talking about. Very informative session. When we want, with our wealth going global, diversifying into property and commodities, gold and silver and whatnot, the one biggest concern I have, like if we buy commodities, gold, silver, those kinds of things, because what I'm noticing as a dollar devalues and as the whole, it's starting the shift is starting. But what you can see is more, they're trying to move towards a centralization of a global digital currency, which would allow more tracking of global finance, global transactions, and all of this, greater control basically. So when it comes to buying commodities, oil, gold, silver, all of this, is it really safe, or do we have the government to contend with? Do we have outright ownership, or is it just something that we're doing to just safeguard ourselves for the time being? I would wonder if you just elaborate on that for us, Scott, please.
Oh, to be honest, dude, I got no idea. So, like, I mean, I think that's a debate for everyone to partake in. I mean, we can have conspiracy theories till the cars come home. I mean, there's a lot of examples. One of the things they were saying, and don't quote me exactly because I can't remember the exact specifics, but it was something like in 1971 when Nixon took the dollar off the gold standard, Americans weren't allowed to own gold. And there were only 2 countries in the world or something where you were allowed to own gold. And then England allowed England and Australia, I think, were some of the first in like 1975. But the majority of the world, like, you couldn't own gold. Now, I don't know for the South Africans whether you can tell me. I don't know if we were allowed to own gold in the 60s. I was long before my time. I have no idea. So
yeah, they were allowed to, Scott.
Okay,
they were
I don't know, but I know, all I do know is the vast majority of the world, it was illegal to own gold. And then now every country on the planet, literally every country on the planet except for North Korea, you're allowed to own gold. And so it's an interesting one because conspiracy theory would say, yes, I agree with you. Governments want more and more control. I mean, think about it, like almost the governments around the world are just getting bigger and bigger and bigger and trying more and more and more to control people. And one of the best ways to do it is to control the money. I mean, we've all seen those movies. I'm sure you've seen it, where like your life just gets switched off, all your credit cards get switched off, all access to money gets switched off, and I remember, I can't remember where I read this or saw it, but someone said, the scary thing with those future movies is they always come true. Like,
that's true.
Go back to like the movies from the 60s and 70s with flying cars and telephones, and like literally it all exists today, and so yeah, I tend to believe that governments will get to the point where they're going to, like, all the monetary will be controlled for taxes and all that and everything else. And then there will be people like me that will consistently want to try and find the alternative. And I don't know how we're going to do it, but there will always be people who will buck the system,
Yeah, no, we can also keep a track of the Simpsons. They seem to be quite accurate in terms of what they predict in their
Yeah.
their animated series. Scott, so if you're going along that logic that you're suggesting, tokenization of gold is such a nice thing. You think it'll also happen for commodities as well to assure more transparent ledger as well as ownership, where your privacy is not compromised and control is more in the hands of the people? What do you think?
I've got no idea about commodities. I'm not an expert in it at all. But I want to show you something quickly. Why is it not coming up? Interesting. Our website, we actually got a website called Wealthy.io. We launched a cryptocurrency in 2017. A little bit concerned now. Why is my website not up? Anyway, okay, I need to talk to my tech team about that. But anyway, so what I do believe, what our cryptocurrency we launched in 2017, we were so far ahead of our time, we fell over. By the way, it's sometimes it's good to be innovative, and sometimes you can be too far ahead of your time. When we were too far ahead of our time, but because we were the very first platform in the world on real estate to go on the blockchain, and in 2016, and then in 2017 we did our first cryptocurrency. So I have a belief system that imagine if you had a cryptocurrency backed by property, because in every local market, properties are different values and prices. But imagine if you had a cryptocurrency that was backed by property, globally backed by property, and then you would have a real world use case, but you would also have an asset that maintains its value. And no matter what happens, whether fiat, gold, Bitcoin, whatever takes over, it's irrelevant because property always has a value in something. Anyway, we apparently everyone loved the idea, but it didn't get much market traction yet.
No, I think the time is coming, Scott, because I feel when you're tokenizing property ownership, and if the biggest thing is once you have that community, which you are now doing with your Wealth Going Global, I think that will be the game changer. You're just waiting for the community edition, and then it holds value because people see value in it as well.
Yeah, no, fair enough. I think, look, our coin was wealthy, wealth with an E on the end. I'm worried about why my website's not live. I'm just sending the tech team a message right now. Okay, listen, I want to continue this debate, but I want to get everyone involved, and we've only got 16 minutes left. So let's I'm going to put everyone into groups. How many people we got here? 29. Okay. I'm going to break us into 10 rooms, and my invitation is for everyone to go and have a conversation, chat about this. It's not just I've given you what I've learned, but I'm not how's the breakout rooms gone? Oh, there. I'm not the only one that knows all this stuff. So let's go and chat. So let's make how many people we got? So I'm going to do 8 breakout rooms. Okay. Jump in the room and let's continue this conversation.
Hi. I'm not sure if I'm supposed to be in this group.
No. Is it Nosy?
Yes,
Hi,
because
Nosy.
I was in group 4 and then for some reason I returned back to the main one.
Yeah, I was with someone else and they exited, so I was by myself.
Yeah, I'll try and sort you out. Let me sort you quickly out.
Okay.
All right.
Well, we can stay here, we can chat.
Where are you? No, where are you now? Okay, Norsi, I'm going to put you with Jane in a room 7.
No problem.
Perfecto.
You should both be, you just need to join it, Jane and Norsi. You can both join it in room 7. You got it?
No,
Oh,
it came up before that I could, but then I exited. Let's see.
maybe it's because you exited. Okay, I'll tell you what, I'm going to move you both to room 8.
Okay. Okay, it's come up now.
How's it? I've got everyone in rooms. I'm just going to put you in one of the rooms so you guys can chat through with stuff. Can't hear you.
I was in room 7 and got kicked out. Can you take me back to room 7?
Sorry, okay. Perfect. I'm sending you back.
Okay, thanks. But I was with Janine, but I think she left the room once I was kicked out.
Okay.
Otherwise, I'll stay here. Otherwise, put me in another room. Otherwise, I'll just stay here.
Where are we? Oh, there you are there. No, because there's no one there. That's maybe why.
Janine was there, but she maybe left when I got kicked out.
Okay, I'll put you to 8 basically, okay?
Okay.
And then Tomelo, I'm going to put you to 1. Hello, everyone. We've got
Hi.
no. Cool. Any takeaways, any thoughts, anything that anyone wants to share? For some reason, people kept getting kicked in and out of rooms. I don't know exactly what was going on. Don't all shout at once. I'm battling to understand you. Camille, have you got something to say?
Thanks, Scott. Yeah, it was very interesting. Thank you for allowing us the opportunity to be in a breakout room. We're just sharing real world concerns about diversification, as well as what it means to us in terms of the devaluing dollar, and how we think about diversifying and securing wealth for either ultra long term, middle term, and short term in view of generational wealth. And it brought up a lot of questions of accessibility, liquidity, and ease of conversion into fiat if it needs to be. So how would you go about doing it? Our question to you, Scott. If you were to buy your gold and your commodities and you have properties and stuff, and you have to leave or go to a different country, or you leave it for inheritance for the next generation, how would you go about liquidating those things in case you need?
I don't know, dude. My family put everything in a car in 1976 and drove to Zimbabwe, and all you could take was what drove to Durban, and all you could take was what was in the car. So we haven't successfully figured it out. Maybe you need to ask a Jewish family, and I'm not being whatever you want to call it, but they've moved many times and they figured it out. So, but us Zimbabweans didn't figure it out. So don't ask me. I've got no idea. I think the answer would be, well, what was indoctrinated with me by my father was, they won't take first world assets, so invest in the first world. And secondly, they can never take away your education. So my dad's principle was, my mom and dad will do whatever it takes to give me and my brother the best education they could afford. Never take that away. So I don't know if that answers your question, but literally my family's lived through this. So that's what
that's exactly my dad's. It was my dad's policy as well. That's what he taught us. We're just also thinking about the wealth going global, Scott. And should we choose to diversify into the properties and the different things there? Nirvana, who was also with us in our breakout room, spoke about how when she visited the States earlier this year, how the dollar is actually quite worthless and inflation is so high. So it begs the question, being a reserve currency and inflation spiraling out of control, how do we see ourselves fitting into this, and how do we then leverage off that to ensure that we have some stability as well? So the ideas of digital currency, tokenized gold and stuff, all of that also came up in the conversation.
Yeah, see, so I think that's why this debate is so valuable, and it's why I wanted to make sure that everyone had the opportunity to be part of it. Again, you've got to buy assets that are inflation hedges, and things like commodities and real estate are inflation hedges. So, but I personally, up until very recently, with that whole gold debate, have only really stuck to assets that pay an income. So the thing that I like about real estate is that it pays an income. So yes, there's inflation in America, but what does that mean? The tenants pay more. So it's irrelevant. In fact, inflation,
Thanks,
the higher the inflation, the quicker you pay down your mortgage. So, because remember, your mortgage stays fixed. So the higher the inflation, the quicker you pay down your mortgage. So I don't know if people know this, but in Zimbabwe, I know of a true story where a guy took out a loan to buy like 20 Mercedes Benzes or something. And then the Zim dollar collapsed. And he owed the bank like the equivalent of like $2 million for these 20 Mercs. And like overnight, the loan changed to like $10,000. So he literally just paid them all. And now he owned 20 Mercedes Benzes for nothing. He paid the bank, he paid them what he owed them. But the Zim dollar was worth nothing. And suddenly he was a wealthy person because he owned these assets that weren't worth anything. Owned the assets that were worth something, but he paid off the debt that was worth nothing. And I don't know. It's just an interesting way of looking at it, But if you own assets that people want, take Zimbabwe as an example. It's my closest reference. I haven't lived in Argentina. people still want houses. So whether they pay for it with chickens or eggs or Bitcoin or Zim dollars or US dollars or bartering, like the bottom line is they're going to pay for something because they need a house.
Thanks, Scott. So basically what you're telling us, so even though something may be globally, inverted commas, bad, there's still a benefit that we can actually leverage off when it comes to that. Because, I mean, I know amongst our Indian community, they say when there's blood flowing in the streets, that's the time to buy property.
Yeah, completely.
It's common saying, they say.
Well, it's Warren Buffett saying as well. So yeah, completely. And there's, Warren Buffett also says, be greedy when others are fearful and fearful when others are greedy. So, there's opportunity. And look, inflation, I mean, Nirvana's right. Inflation's crazy. But I mean, again, I told the mastermind people this on Wednesday. The guy that's coming to present to the mastermind in August does self-storage. He's got $100 million worth of self-storage. He's been doing it 28 years. He's got 30 facilities, and he's got two strategies. One is he goes and buys self-storage facilities from mom and pop operators that basically don't really know what they're doing. And he gets rid of them, and he has no staff. And so he, on like $1 million kind of income, he cuts the cost by like $60,000, which immediately puts up the net operating income, which immediately puts up the value of the property. So that's one way it enhances the value quickly. And the other way it enhances the value quickly, puts up the rents incrementally. So every 3 months, he puts up the rent by 10%. Now, if you've got an $80, sorry, I'm just going to mute whoever's talking. If you've got a self-storage unit and you're paying $80 a month, well, in 3 months' time, it goes up by 10%. Well, it's $88. You don't even really notice it. It barely impacts your debit card. And 3 months later, it goes up by another 10%. So now it's $96, whatever the exact number is, but you get the point. But you still do nothing about it because your Saturday morning is more important to you than going and getting a U-Haul and moving it and whatever. So you just put up with inflation. Inflation's going up everywhere else. But the difference is inflation in America is traveling at, depending on who you listen to, between 2 to 5%. But his rentals are going up by 40% a year. Pretty interesting.
Really, thank you, Scott.
Yeah. So I think it's just, I suppose the number one way I'd answer your question is the way to beat the odds is to get the right information and be ahead of the trend. And that's what Wealth Going Global is all about.
Thanks, Scott.
No problem. So I can see that we are on the hour. Is there anyone else got any other burning questions? What is the storage guest speaker? When is the 13th of August is the next mastermind session. So he's coming to present to the mastermind on the 13th of August. Yeah, anything else? I'm conscious of the fact we're on the hour. Yeah, I'm also looking forward to it. He's also a really cool dude. When you're like standing at a bar having a beer with someone, and maybe this isn't the same for everyone, but certainly for me, you're like, wow, this is a really cool dude. Like, I like this guy. He's a cool guy. So I did like to do business with him. I just like the way, it's like the ethics, like the way he does business. So, okay, everyone. Well, listen, have a fantastic week. I hope you have a nice weekend. We'll see you next week. Next week, the topic will be, let me just tell you what it is. By the way, I've updated the cheat sheet with that panel for everyone. So next week will be the tariff trap, why America will lose the trade war. Quite an interesting one. Cool. See you all next week. Cheers, cheers.
Thanks, everyone.
Oh, by the way, sorry, just quickly before you duck. Next Saturday, I'm giving away a gift where I'm going to put a workshop on next Saturday, which is all about the mindset. So how do you change from the employee mindset, the self-employed mindset, the business owner mindset to the investor mindset? It's going to be a 4-hour workshop, and it's going to be all based on Robert Kiyosaki's teachings. And basically, what do you got to be an investor? What's the mindset? What are all the habits and everything got to have? And normally we would charge $497 for that. But for the next 67 hours, we're going to give away free access based on Mandela Day. So yeah, make sure that you take advantage. Okay.
Where can we sign up for that, Scott?
It's already on the Wealth University. So if you go to Wealth University, it's there. I need to put it up on Wealth Hackers and the Mastermind. But Wealth Hackers and Mastermind, you guys will get access to it anyway. So don't stress. I'm mainly telling you, I mean, for this community, you've got access anyway, but the point is I'm just telling you about it so you plan for it if you want to be there.
You guys are welcome to contact me as well. And I can send you the links. But as Scott said, I think most of you already included. But here's my number for those that don't have it.
And I think also, I mean, you should all have access to the Wealth Weekend. I would strongly recommend, if you can, you should attend the Wealth Weekend, which is the 9th to the 13th of September, which is what we do with our family office. So there's nothing more powerful than what we do than our Wealth Weekend. It's the single most powerful thing we do. Cool. Cheers, everyone. Have a nice weekend. Bye then.
Bye.
Thanks,
Thank you,
Scott.
everyone.
Thanks, Kelly. Bye.
Bye.
Bye.